Hello and welcome to the Assay. Today, I am happy to be joined by Matt Griffin, co-portfolio manager for Australian small companies at Maple-Brown Abbott. Matt, it's great to see you again.
You too, Amy. Thanks for having me.
Absolutely. It's always good to catch up with all of the investors within our network in Australia and globally. So maybe we could just kind of kick things off. You could talk a little bit about your experience in the investment space and the current focus that you have at Maple-Brown Abbott.
Yeah, definitely. So I've been in investment markets now. Started in 2008, just before the GFC. So that was obviously a great learning experience for me really early in my career, and kind of taught me a lot of the risk management and focus that we have now, especially regarding kind of smaller microcap investments. So my history has really been smaller microcap end of the market on the ASX, a bunch of different smaller microcap funds here in Australia. The team has been at Maple-Brown Abbott for about 3 years. We've had the small cap fund running here. Importantly, though, that's a continuation of the team's previous tenure at AMP Capital, where we had about a 9-year track record. So we're up to about 12 years in total at that track record. We're generalist investors. We look at anything outside the ASX 100. Just has to have an Australian listing, can be dual listed. Although resources is generally about a quarter to a third of the index in the portfolio. So three of us in the team, I sort of specialize in resources. That takes up a big amount of my time and energy. Within that sector, the focus really is on companies in production or that will be producing within maybe a 2 to 3 year time horizon. We do value earnings certainty, so we don't take too many risks in terms of explorers or any of the more kind of binary outcomes you can find in earlier stage resources companies.
Okay, sounds good. Recent news from last month noted that the ASX is set to receive a pretty big influx of junior mining company listings, mostly driven by kind of the energy transition and the need to grow the supply of key metals. So, what sort of impact do you think that this is going to have on the Australian markets? And I suppose is the community there kind of preparing in any way for this?
Yeah, absolutely. And it's actually great to see. I mean, we are seeing a lot of dual listings coming to the ASX. I think certainly a lot of the Canadian and European listed resources companies probably don't feel like they're getting a good hearing in their home markets, and potentially look to the ASX with a bit of envy for the way some of the resources companies trade here, and think this could be a more conducive environment to be listed. So this really kicked off last year with a couple of copper companies. We had Metals Acquisition Corp, which is now MAP Copper, and Capstone Copper listed here early last year. They've had a reasonable level of success with the Aussie market. And we also had Alcoa, which dual listed post acquiring AWC on the ASX. So that's been quite an interesting one to follow in terms of all the moves in bauxite and alumina over the past year as well. In terms of the pipeline, it's pretty diverse. You did say most of the energy transition. There are quite a few gold companies as well, the likes of a Greatland Gold, Orezone. The one new IPO we see in the pipeline is Ivanhoe Atlantic in the iron ore space. So it is good to see for Aussie investors. In the small cap space, we've got a lot of options in gold, not too many other options in terms of base metals or any of those kind of transition metals either. So having a few new options is good. I would say these companies do need to be of kind of sufficient size and scale. They either need to raise money on the ASX or have shareholders who are quite willing to bring stock over to the ASX. From my perspective, there's not a huge amount of, not really much point listing here without any liquidity in the local market. Management teams do need to come down to Australia probably every quarter, at least in the first couple of years, to build that relationship. But when that's done, and as provided there's liquidity in this market, investors in the ASX are happy to back resources companies. It is something we know quite well. Capital markets are open for good projects and good management teams, and we can see how well some of those stocks have done. So I think provided those criteria are met, there's no reason why these companies shouldn't do well. I do think, though, that we have seen a few examples of dual listed stocks that haven't had much liquidity in Australia. SSR Mining being a good example, which is now actually delisting from the ASX and going back to kind of North America just as the primary listing. So overall, it's great. Gives us more options to invest in a broader mix of kind of base metals companies and a few new gold ones. And there's a lot of work going on in the background, just getting up to speed with some of these assets.
Yeah, absolutely. And so looking at the fund specifically, you are focused on regional, ASX listed small cap opportunities. So can you talk a little bit about, what you find most interesting about this sector? What kind of drives your investment decisions?
Yeah, definitely. So, as I said before, we're generalist investors. We typically focus in a sweet spot of excluding the top 100 stocks on the ASX, and we go down to about 100 or $200 million of market cap. So we don't go down to the very kind of micro cap end. That gives us about 600 stocks to invest in the universe. It's a really good number. There's three of us in the team, so there's a lot to do. But 600 is enough breadth in the market to find good ideas and go to different parts of the market. And it's a small enough list so we kind of know a little bit about every stock and don't miss any opportunities, as compared to someone with a global mandate who has tens of thousands of stocks they've got to try and whittle down into a small focus group. What really interests us is there's a range of idiosyncratic ideas out there. The majority of our positions aren't linked to any kind of macroeconomic call out there. We can actually look at stocks on a individual basis, find the drivers within the business, whether it's cost out, growth plans, really dig into that. And given many of these small caps are quite under-researched and not well known by the market, we can always find good angles that the market's not onto. So that really just provides us a good portfolio of opportunities which can outperform in most market environments. We really aim for consistency in the fund. We're not going to be probably the top performing fund every year, but we hopefully won't be the bottom performing fund either. We just aim for good, consistent returns with relatively low volatility compared to the small cap market. And being generalist investors allows us to go in and out of resources where we see opportunities. Conversely, we don't have to hold resources, so we can move out of the space when we don't have favorable views on commodities or companies. And we can drift in and out of growth and value styles or any other thematics as well. So we have a big earnings focus. We go where the earnings go and happy to own stocks in any part of the market where we see good earnings growth.
Okay, sounds great. And you already started to talk about kind of the dual listed companies, the growth and potentially more gold companies coming in to the Australian market. Are you seeing any kind of key exciting opportunities coming out of Australia or into Australia at the moment? So any sectors or regions? We don't need to go into specifics, but what's most exciting to you right now?
Yeah, the last few months it's really been gold. Gold's been the only game in town. I think my colleague just told me the top 10 performing stocks in the ASX 200 for the month were all gold stocks, which is quite amazing because I think there's probably only 10 gold stocks in the ASX 200, so they're all just the top 10. It's becoming a sector that's kind of too big for investors to ignore down here. Remarkably, about 17% of the ASX Small Ordinaries Index is gold now. And historically, that's ranged between maybe 5 and 7%. So it's incredible how quickly that's shot up. Things like lithium, uranium, oil and gas, some of these other sectors that have had success in the past and got up to big index weights have really fallen by the wayside. We've always got quite a good weight to gold in the fund, so it's been positive for us. I think what's happened on the ASX as well is a lot of these companies have had headwinds ease. A couple of years ago, there were labour shortages. There was a lot of cost inflation coming through the industry. That's really evaporated in the past 12 months. So we're probably seeing 2/3 to 3/4 of these companies actually deliver to guidance, which is excellent compared to history, which is probably usually well less than 50%. And this ASX gold cohort has actually performed very well. So there's a lot of commentary globally around how disappointing the GDX and GDXJ have been relative to the gold price. But when you look in the past year, the ASX small cap gold space has actually done double what the Aussie dollar gold price has done. So it's been a very good sector. That being said, there are a few signs of a bit of froth at the top of the market. Brokers starting to forecast $4,000 gold. Every man and his dog just wanting to talk about gold and gold investment opportunities. So that does make us a bit more cautious, and we are trimming back some of the weights there. We do think if there's a decent pullback, though, we do have a couple of stocks we can go to increase those weights again. Some of the other sectors, battery materials looking, interesting. Pretty hard to tell when there's going to be a turning point. There's obviously the sector's just been decimated, but We do see demand for lithium has held up very well, still growing very strongly. We're getting the tail end of all these supply growth projects coming on now, probably through the back end of this year. But when we look forward to 26, 27, a lot of those new projects have been pulled from the pipeline. So we think it's probably only a matter of time before we get another bull market in lithium. Trying to tell when is a bit hard. So we've only got a very small position in kind of one of the junior companies there. Still quite positive on uranium, although becoming harder to find uranium stocks to invest in. A lot of the juniors have kind of shot themselves in the foot with production downgrades and commissioning issues. So we've really just consolidated into one core holding who is delivering on the ramp up. We do see continuing favourable supply demand dynamics in uranium to play out over the next year or two. And, you know, elsewhere in the fund in terms of the industrial space, there's a few key thematics we've got in the fund at the moment. The first being defence, just given the ramp up in global defence spending, especially outside the US, and some of the specific stories we have on the ASX relating to that thematic. Aged care has been a good thematic here. Again, idiosyncratic idea, very uncorrelated to anything going on in the macro environment. A good story in terms of funding coming through. The services sector in terms of sort of mining construction services, what we're really doing there is playing some of the picks and shovels approach towards the gold rush and some of the other sectors. These stocks have been tough historically, but what's really changed in the past few years has been much more discipline around the capital management side, much more discipline around new investments and CapEx. And we're seeing that in terms of better returns to shareholders through capital management and other sources there. So that's been another key sector for us. But really, as I said before, what we're trying to do is just build a portfolio of kind of individually good ideas without focusing too much on any macro or thematic research.
And so finally, you've already started to go into, some of the kind of key trends driving the industry right now, but wondering if you have any insight that you want to share on kind of the year ahead and any trends that you think we should be on the lookout for.
Yeah, definitely. It's very hard to tell what's going on in the macro and how that's going to play out over the next 12 months. Different headlines saying different things every day. So I think for us, we are very stock specific focused. We're not trying to make big macro calls. What the US does, what happens in various geopolitical environments. We very much do focus on the stock specifics. What we have seen in the last few months is a big reversal in some of these longer term trades. So some of these momentum, high growth, crowded trades really have fallen by the wayside in the past couple of months. And there's been a bit of a rotation into value. History tells us that these rotations happen quite often, but only continue if we actually see earnings follow through, which we haven't seen yet. We haven't really seen earnings crack for the likes of the Mag 7 yet. We haven't seen earnings in the value end really start to pick up. So we kind of need to see those earnings trends play out if this reversal is to have legs. So short term, we might actually go back to a bit of a growth focus in the market, I suspect, over the next couple of months. But the longer term trends in terms of momentum growth stocks and value and where they're trading probably suggests that this recent reversal may be a longer term trend to play out over the next couple of years. We're seeing a lot of volatility around small cap stocks in the ASX, particularly related to earnings releases. So relatively small earnings changes are leading to very elevated volatility in stocks and very big stock moves. For investors with a medium to longer term time horizon, this is actually a very good opportunity. For those investors who have a short-term focus or just chasing momentum in stocks, it can be a bit troubling. So I think we're going to start to see some quite divergent performance returns from various funds and various sectors of the investment community over the coming months. And the other thing we're seeing is a lot of M&A activity, particularly on the ASX down here. It's been driven by a low Aussie dollar. So we're seeing a lot of activity from US, Canadian listed corporates using the strong currency to acquire micro cap and small cap stocks in Australia that look quite cheap by historical standards. Seeing big premiums in the range of 50 to 100% plus premiums for some of these stocks. And a lot of M&A in the gold space as well, just given many of the mid cap and small cap producers don't have much mine life, haven't been doing much exploration, so they've needed to acquire to keep that growth profile looking pretty healthy. More broadly, and this is probably something more for the medium term, but we have had a big period of small cap underperformance on the ASX. The market down here has really gravitated towards large cap banks, large cap miners such as BHP and Rio, and small caps have kind of been left behind. So we do see there's scope for small caps to catch up significantly. You probably do need a bit more of a stable economic environment and a bit of quiet on the news front for a while for that to start to play out. So that may not be something for the next 6 months, but we think medium term there's a very good prospect of a small cap catch up on the way.
Okay, really interesting. Well, definitely seems like there's quite a bit that we should be on the lookout for when it comes to the ASX and the industry in Australia. So that wraps up all of the questions that I had for you today, Matt. So I want to thank you for joining us here on the Assay.
Great. Thanks, Amy. It's been a pleasure.